last class we had started off with the secondary market, that is a part of your uh, uh, capital market and secondary market, right? So this is the second part. So otherwise we call it as stock exchange, secondary market or stock exchange or stock market. So we started with the meaning as well as the functions of the stock exchange. We discussed about the liquidity and marketability of securities, surrender of funds, supply of long-term funds, and the flow of funds to profitable projects. So let's discuss on continuing on the features of secondary market. Fifth point is motivation for improved performance by the company. Now, since we all know that every company has to make sure they publish their final accounts, right? It can be a balance sheet, profit and loss account, or let's say cash flow statement. Okay, now these are certain documents or statements that legally the company has to publish them on their website, right? It is compulsory. Or you can also go check out on moneycontrol.com, where you can have the balance sheets, either it's consolidated or otherwise. All the statements of each financial year have been published. Okay, now what happens when the statements are published is it is a motivation for improved performance. Okay, now price of these financial assets, that is what that you trade on the stock market, right? Shares, debentures, bonds, right? Those are your financial assets. So the price of such assets depend upon the company's performance, definitely, right? Now when a company is said to be, or their profit and loss statement or the balance sheet shows good amount of profits, good amount of stability in the company, automatically the prices of such companies shoot up, right? The prices of such companies increase. On the other side, if a company is found to be fraudulent, or if company is showing only losses in their books of accounts, every year the profits are decreasing, do you think such companies share prices are going to increase? No, they are going to decrease. Now these price ranges, it can be increase, decrease, or the stagnant prices are very much visible in the eyes of public. So this public exposure makes a company conscious of status, because it is very common, or it is understood that when the public is watching the company's performance in terms of money matters, or in terms of performance, quality, what kind of goods they offer, right? What is the public's opinion, or what kind of standing or trust they have upon the society, right? When we consider all these factors, definitely it will make the company more conscious that yes, the public is watching us, yes, the public is aware about the price increase or decrease of our financial assets. So that will make them conscious of their status in the market, and it acts as a motivation to improve its performance further. So now the stock market or secondary market enables each company, whether it's a small scale company or it is a multinational company, irrespective of their size and nature, every company might, by publishing its information or making sure its prices increase or decrease in the stock market, it acts as a motivation for the companies to what? Improve their performance, to be the number one in the market, to provide the best quality goods or services, to be the most ethical company, to be the most promising company, to be having the largest market share in a particular industry, etc., right? So stock market has this feature of what? By publishing the prices or making the statements public, enables the motivation to improve the performance. Number 6, promotion of investment opportunities. Stock exchanges mobilizes the savings of the public and promote investment through capital issues. Now we have always looked, when we started this chapter, financial markets, we studied that market or financial market is a platform. Whether we are talking about money market or we are talking about capital market, we for sure know that it mobilizes the savings. correct? If you're dumping money in a wardrobe, it's not going to grow, it's not going to multiply, it's going to remain as it is. But when you're starting to invest either in money market or capital market, especially in the secondary market, you for sure know that the money is going to multiply or grow. That's why it says stock exchanges mobilize the savings of the public and also promote investment through capital issues, right? That means it is your savings, and like you, there are 1,000 other people who are putting their savings in the form of stock exchange by purchasing share or by purchasing debenture. When you purchase these certificates or financial assets, that money will contribute as a capital formation for the company. So basically, you're helping the company to form capital and thereby effectively function. And what does the company do with the capital? Company might buy fixed assets, company might use that money to buy raw materials and produce the finished goods and again give back to the society. So unless there is an effective secondary market investment opportunities, secondary market investment opportunities will not be available. So what the statement is talking is, if there was no market, there would be no investment opportunity. So the more efficient market that we have, the more profitable investment opportunities we will be having. So that is what the sixth point of the secondary market talks about here. Number 7, availability of business information. The changing business conditions in the economy are immediately reflected on the secondary market or stock exchange. Now, as I told you, always given examples. Any issues in and around the economy or very serious things that are happening, can be positive aspects or can be negative aspects that are happening in the economy. They quickly reflect on the stock exchange. Suddenly the stock exchange prices will all rise or they will all fall down, right? It can be two extremes. Why is it happening? Because of the situations or the economic conditions in our country, right? Now there was farmers protest, that can also impact, right? There was let's say presidential elections, that will also impact, yes or no? Now there was a pandemic, right? Businesses lost their profits, they lost their companies, they lost their staff or laid off, etc. That also impacted the stock exchange. And now this is February, right? Now in this month, what's special about this month is there's a budget coming up, yes or no? Budget is going to be coming up for the entire next financial year in the cabinet. So this big thing, this is a big thing for a economy. Again, the announcement of budget will cause the prices to fluctuate in the stock exchange. So that is what it says, the business conditions or the economic conditions immediately reflect. It's not that the news is today and the prices start fluctuating after a week. No, prices fluctuate immediately. So whether it's an inflation or a depression, they can be identified through the dealings of the stock exchange. So when prices are increasing, we tend that it is a movement of inflation in the economy. When the prices are dropping down, we tend to it is a depression or a deflation in the economy. So depending upon the prevailing information, policies can be taken by the government. So depending upon the changing circumstances or situations in our country or economy with respect to the changes in the stock exchange or the stock market, the government takes the necessary policies to tackle them. Number 8, promoting marketing of new issue of companies. If the new issues are listed in stock exchange, they are readily acceptable to the public since listing is done after evaluation of such securities by the concerned stock exchange authorities. Now the point is talking here that I am promoting or marketing of the new issue of companies, right? Now because if there are new startup companies who want to go public, first thing what? IPO. Now, before that IPO comes into picture, the company has to complete a lot of paperwork, lot of legal formalities, take lot of permissions from register of companies, SEBI, everything. It has to go through all the scrutiny, all the evaluation, and then reach the IPO. Once the IPO is done, they'll get listed on the secondary market. When I'm talking about IPO, it is primary market. After they have been in the public or being issued to the public, then the securities get traded in the secondary market or stock market. When I talk about stock market, it is the secondary market, correct? Now here what we are talking about is we are encouraging or marketing or promoting more companies to have new issue of shares. Why? Once they are on the stock exchange, we know it has gone through a lot of evaluation, a lot of guidelines to be followed by SEBI or Register of Companies, Companies Act of 2013, etc. We know it is a genuine company. We know the company as a license to issue shares to the public. So in that way, not only the company can gather a lot of capital, but also even the investors have an option to invest their money or invest their savings. So the eighth feature of the stock market or secondary market is to promote new issue of companies. The final one, other services. Stock exchange enables the investors to reduce their risk by diversified portfolio of investment. Now you and I, as an investor, we know commonly is if we have 100 rupees, we just invest 100 rupees in one particular investment. Let's say gold. I'm putting my complete 100 rupees in gold investment. Okay. Now if gold prices fall, entire money for me is a loss, right? I might not have much profit in the investment. But here secondary market, we are talking about portfolio. Portfolio means I'm diversifying my funds. Example, I have 100 rupees, the same 100 rupees. In this 100 rupees, what I'm going to do, 20 rupees in gold, another 20 in share market, another 20 in post office savings, another 20 in, let's say, bank deposits, another 20 in debenture or bond. You understood? I explained to you 5 different aspects of investment: gold, bank, post office, share market, and the bond market. The same 100 rupees previously I invested where? Only in one single investment opportunity. But now what am I doing? When I say portfolio, I am diversifying that 100 rupees into 5 different markets. Got it? Now even in these 5 different markets, even if one market crashes, I have absolute loss in that market, I do not have to be sad. Why? I have the backup of the rest of the 4 markets. Is that clear? So this is what the stock market enables you. It enables the investor to reduce the risk. So in the first case, what did I do? The entire 100 rupees I put it into one market or one investment opportunity. If that investment does not work well, everything is a loss for me. Instead, if I'm going to divide and diversify into 5 different markets, even if one market I'm going to lose, it's not a big loss for me because I have a backup of the rest of the 4 markets. So it also develops savings habits among the community and pave the way for capital formation. So we know that many investors today actively participate or invest their money into stock exchanges. Why? Because it develops the habit of savings. Instead of the traditional methods in just a bank account or just an LIC deposit, etc., I would rather have my money in stock exchange because yes, I accept the risk is high, but also the return is equally high. Yes or no? Return is high, as your return will always be equal to your risk. If your risk is high, return will be high. If the risk is low, then the return will be very low. So here the secondary market completes with 9 different features or functions, okay, that we have completed for today.